The US government just dropped a 40-page blueprint to build flying taxis into American infrastructure. If you own JOBY, Archer, or you're eyeing eVTOL plays, this changes everything about your investment thesis. Look, if you're short on time or you don't trust some cat on the internet with your money decisions, here's my quick summary for you. The DOT's Advanced Air Mobility Strategy isn't just another government press release. It's the regulatory clarity that venture capitalists and institutional money have been waiting for. Regulatory uncertainty is literally the #1 killer of emerging tech investments, and Washington just took a sledgehammer to that wall. Alright, if you're still here and intrigued, let's break this down properly in the next 10 minutes. But for those who are new here, hey, I'm DataCat, former corporate drone who spent some time inside a Fortune 50 company staring at spreadsheets and pretending to enjoy quarterly earnings calls. Now I trade the cubicle grind for, well, lasers and keyboards. This channel's only about 5 months old, so I'm not gonna pretend I'm some YouTube or trading guru. I'm just an analyst who got tired of watching financial media oversimplify things, or worse, pump garbage. My whole thing is, I dig into the actual filings, the actual data, and I try to explain what it actually means for regular investors like you and me. Think of me as that slightly anxious cat who reads the footnotes. You know the type. Lands on their feet but still looks mildly concerned about everything. If you're into this kind of analysis, please hit that like and subscribe button. It means a lot to a small channel like this. Anyway, enough about me. Let's talk about why December 17th, 2025 might be a date you remember. So on Wednesday, US Department of Transportation Secretary Sean Duffy unveiled something called the Advanced Air Mobility National Strategy. Now I know, government strategies sound boring, like watching paint dry while someone reads you a compliance manual. But here's why you should care. This is the first time the federal government has said, in writing, with an actual implementation plan, eVTOL and advanced air mobility aren't science projects anymore. We're building the national framework to make this real. And they're not messing around. The strategy comes with 40 recommendations organized around 6 pillars: airspace, infrastructure, security, community planning, workforce, and automation. Think of it this way. You can build the most beautiful electric aircraft in the world, but if there's nowhere to land it, no one trained to fly it, no airspace rules that make sense, and every city has different permitting requirements, you've got an expensive paperweight. The DOT just said, we're solving those problems at the federal level. And so, here's where it gets actually important for your portfolio. Alongside the strategy, they announced something called the eVTOL and AAM Integration Pilot Program. This is a 3-year program where the FAA elected at least 5 projects, pairing state and local governments with private companies to run real operations in real environments. Why does this matter? Because right now, every eVTOL company is stuck in what I call demo purgatory. They can fly, they can show off, but they can't actually run commercial routes at scale because the regulatory infrastructure doesn't exist yet. This program is designed to bridge that gap. It generates the operational data, dispatch reliability, turnaround times, maintenance cycles, community noise response, pilot training throughput that converts cool prototype into bankable commercial operation. For companies like JOBY, this is oxygen. You can't sign firm contracts with airlines or municipalities if you can't tell them when and how you'll actually operate. The EIPP creates that pathway. Oh, and here's a detail Wall Street analysts probably glossed over. The program explicitly emphasizes integrating aircraft developed or offered by United States-based entities. Yup, Washington learned from the drone industry, where they basically handed the entire market to China, and they're not doing that again. US-based eVTOL companies just got a policy tailwind that foreign competitors won't enjoy, like a cat knocking your competitors off the table. Subtle, but effective. Alright, let's talk JOBY specifically, because you didn't click on this video to hear me ramble about policy documents. First, let's take a look at its Q3 2025 numbers straight from the 10Q. Total revenue, $22.6 million. That breaks down into passenger revenue at $13.653 million, and other revenue, such as government flight services and engineering contracts, at about $8.9 million. Now, $22 million in revenue sounds small for a company with a multi-billion-dollar market cap. And you're right to be skeptical, but context matters. JOBY isn't in revenue mode yet. They're in certification and infrastructure mode. The money they're making now is from their acquisition of Uber Elevate's assets, specifically the Blade helicopter service, plus government contracts. Speaking of Blade, they transported about 40,000 customers in Q3. If you do the math, that's roughly $341 per customer. That gives you a real-world demand proxy for premium urban air mobility services. Yes! People will pay $300+ to skip traffic. That's not theoretical. That's happening now, with helicopters. eVTOLs just need to undercut that, while being quieter and more accessible. Now let's talk about the balance sheet, because this is where pre-revenue companies live or die. End of Q3. JOBY had $978 million in cash and short-term investments. After the quarter, they raised another $576 million through an equity offering. So pro forma liquidity? Roughly $1.55 billion. JOBY's own guidance says they'll use between $500 and $540 million this year. Simple division. That's about 3 years of runway at current burn rates. Now 3 years sounds comfortable, but here's the cat's honest take. Burn rates can change fast. Certification delays, manufacturing ramp-up, vertiport build-outs, any of these can accelerate cash consumption. The integration pilot program announcement actually cuts both ways here. Yes, it could pull revenue opportunities forward, but it also means JOBY might accelerate manufacturing and operations spending to take advantage of those opportunities. And more opportunity often means more capital required to capture it. Just keep this in your mind as we move forward. Okay, let's do some forward modeling. It's just simple maths based on what we see from their last earnings. And I want to be transparent about the assumptions here. Base case scenario per aircraft, 30 flights per day, 2.5 passengers per flight, $200 average fare, 330 operating days per year. That gives you roughly $5 million in revenue per aircraft per year. While the aggressive case, 40 flights per day, 4 passengers per flight, $250 fare, same operating days, that's about $13 million per aircraft per year. Now scale that to a fleet, 100 aircraft at base case, $500 million in annual revenue, 500 aircraft at base case, $2.5 billion. Aggressive case with 500 aircraft, $6.6 billion. Sounds great, right? But here's the sobering math. JOBY's current operating expense run rate is about $817 million per year. Q3 alone, R&D was $149 million. If you assume a 20 to 40% contribution margin on eVTOL operations, the break-even fleet size ranges from about 410 aircraft at 40% margin to 820 aircraft at 20% margin. That's a lot of flying cats. But, hear me out, this is important. R&D spending should drop significantly once certification completes. That $149 million per quarter in R&D shouldn't be a permanent fixture. Also, JOBY says their Dayton facility can eventually support up to 500 aircraft per year. They're building for scale, not for demos. So, next, let's look at the chart as of December 19th, close at $14.22. Long-term trend still bullish, price is about 18% above the 200-day moving average, Golden Cross is active, and in the medium term, price is below the 20-day EMA and the 50-day SMA. Also note that the 50-day slope is negative. So we're in consolidation, a longer-term uptrend that's cooling off and trying to build a base. Momentum indicators, RSI bounce from 39 to 47, that's an oversold reflex bounce, but momentum hasn't confirmed a bullish flip, still below 50. Volume, up 1.31 times the 20-day average on an up day. Money flow improved, but it's not screaming institutional accumulation yet. My read? This is stabilization, not a new uptrend leg. The buyers defended, but they're not dominating. And so, bullish case here is if JOBY closes above 1450, that's the 20-day EMA and the 50% Fibonacci level, and holds with volume above 1.2 times average. Next targets are 1520, then 1590. But, if it fails to reclaim 1450 and closes below 1370, this was probably a dead cat bounce. Opens the door back to 1350, 1320, and the line in the sand around $12.10. Use those levels, don't just hope. So where does this leave us? The DOTA announcement is legitimately meaningful. It's not hype, it's the federal government committing resources, creating pilot programs, and explicitly backing US-based eVTOL companies. For JOBY specifically, cash runway of about 3 years. Clear path to early commercial operations through the EIPP. Real demand validation through Blade's 40,000 quarterly customers. Manufacturing infrastructure designed for 500 aircraft per year. The risks are real too, certification timelines, capital needs, execution on vertiport partnerships and competition. But the regulatory uncertainty discount that's been hanging over this entire sector, that just got a lot smaller. If you're long JOBY, watch the 1450 level. If you're considering a position, maybe let the technicals confirm before you pounce, like a cat, patient, calculated, and slightly paranoid about everything. Alright, that's the breakdown. If this helped you understand what's actually happening with eVTOL investing and not just the headline noise, consider hitting that subscribe button. I'm still a tiny channel, so every sub genuinely helps the algorithm notice I exist. And if you want more deep dives like this, actual filings, actual math, no hype, drop a like so YouTube knows this kind of content is worth showing to other investors. Got questions? Disagree with my analysis? Leave a comment. I actually read them. Mostly because I'm a cat and I'm curious like that. Thanks for watching. DataCat out, and I'll see you in the next one.